Education is expensive. The cost of college has been rising steadily. Many students rely on loans to fund their education. These loans can help you achieve your dreams, but it's crucial to understand them fully. Student loans are a significant financial commitment. It's essential to borrow responsibly. You need a plan for repayment. This guide will provide you with the knowledge to navigate student loans. What exactly are student loans? They are borrowed funds. You use them for education expenses. These expenses include tuition, fees, books, and living costs. You must repay these loans. Interest is added over time. There are two main types of student loans, federal and private. Federal loans are funded by the government. Private loans are offered by banks and other financial institutions. Each type has pros and cons. Federal student loans offer several advantages. These include lower interest rates. They also have more flexible repayment options. Some offer loan forgiveness programs. These are not typically available with private loans. Private student loans may have higher interest rates. They often require a cosigner. This is especially true if you have limited credit history. However, they might offer higher borrowing limits. This can be helpful for students with significant financial need. Obtaining a student loan involves a few key steps. First, you'll complete the free application for Federal Student Aid, or FAFSA. This form determines your eligibility for federal aid. Then you'll receive a financial aid award letter from your school. Once you accept your loans, you'll need to sign a Master Promissory Note, or MPN. This legally binds you to repay the loan. After you graduate, drop below half-time enrollment, or leave school, you'll enter a grace period. This typically lasts 6 months. Then your repayment period begins. Section 5. Navigating repayment. Options and strategies. Repaying your student loans can feel overwhelming, but there are various repayment options available. The standard repayment plan divides your loan into equal monthly payments. You repay the loan over 10 years. Other options include graduated repayment and extended repayment. Graduated repayment starts with lower payments that increase over time. Extended repayment stretches your repayment term. This results in smaller monthly payments. However, you'll pay more in interest over the life of the loan. Section 6. Exploring income-driven repayment plans. Federal loans offer income-driven repayment plans. These plans base your monthly payment on your income and family size. Income-driven repayment plans can make repayment more manageable, especially if you are facing financial hardship. Some popular income-driven repayment plans include income-based repayment, pay-as-you-earn, and revised pay-as-you-earn. Each plan has its own eligibility requirements and terms. It's crucial to compare them carefully. Choose the plan that best aligns with your financial situation. Section 7. Loan forgiveness, myths, realities, and opportunities. Loan forgiveness programs can provide significant relief from student loan debt. These programs are designed to help borrowers who may be struggling to repay their loans, offering a way to reduce or eliminate the remaining balance. These programs forgive a portion or all of your remaining loan balance after you meet specific eligibility criteria. Eligibility often includes making a certain number of payments, working in a specific field, or meeting income requirements. One well-known program is Public Service Loan Forgiveness. This program is aimed at individuals who work in public service jobs, such as government or non-profit organizations. It forgives the remaining balance of your direct loans after you make 120 qualifying monthly payments. These payments must be made under a qualifying repayment plan while working full-time for a qualifying employer. You must work full-time for a qualifying employer. Qualifying employers include government organizations, non-profit organizations, and other public service jobs. Qualifying employers include government organizations and non-profit organizations. This means that if you work for a city, state, or federal government agency, or a non-profit organization, you may be eligible for loan forgiveness. Other forgiveness programs target specific professions, like teachers, nurses, and lawyers. These programs often have their own set of requirements and benefits, tailored to the needs of professionals in these fields. For example, the Teacher Loan Forgiveness Program offers up to $17,500 in forgiveness for teachers who work in low-income schools for 5 consecutive years. Nurses and other healthcare professionals may qualify for forgiveness through programs like the Nurse Corps Loan Repayment Program, which offers up to 85% repayment of nursing education debt in exchange for working in critical shortage areas. Lawyers may find relief through programs like the John R. Justice Student Loan Repayment Program, which provides loan repayment assistance for state and federal public defenders and state prosecutors. Section 8. Refinancing, lowering your interest burden. Refinancing is a powerful tool that can help you manage your debt more effectively. By understanding the nuances of refinancing, you can make informed decisions that will benefit your financial health in the long run. Refinancing involves taking out a new loan to pay off your existing loans. This new loan typically comes with different terms, which can include a lower interest rate, a different repayment period, or both. The goal is to make your debt more manageable and less expensive over time. This can be beneficial if you can secure a lower interest rate. A lower interest rate means that more of your monthly payment goes towards paying down the principal balance of your loan, rather than just covering the interest. This can accelerate your debt repayment and save you a significant amount of money over the life of the loan. A lower interest rate can save you money over the life of your loan and reduce your monthly payments. Lower monthly payments can free up cash flow, allowing you to allocate funds to other important areas of your life, such as savings, investments, or other financial goals. If you're considering refinancing, it's essential to shop around and compare offers from different lenders. Each lender may offer different rates and terms, so taking the time to research and compare can ensure you get the best deal possible. Don't just focus on the interest rate. Also consider any fees or costs associated with the new loan. Assess the terms and conditions carefully. Look for any hidden fees, prepayment penalties, or other clauses that could affect the overall cost of the loan. Understanding these details can help you avoid any surprises down the road and ensure that refinancing is truly beneficial for you. Consider the impact on loan forgiveness eligibility. If you have federal student loans, refinancing them into private loans can make you ineligible for certain federal loan forgiveness programs. These programs can offer significant benefits, so weigh the pros and cons carefully before making a decision. Refinancing federal loans into private loans can make you ineligible for certain federal programs. Always consider your long-term financial goals and the potential impact on your eligibility for federal benefits before deciding to refinance. By taking a thoughtful and informed approach, you can make the best decision for your financial future. Section 9. Achieving financial freedom, planning for a debt-free future. Student loans can be a valuable tool for financing your education. They provide the necessary funds to cover tuition, books, and living expenses, enabling you to focus on your studies without the immediate pressure of financial constraints. However, it's important to remember that these loans are not free money. They come with the obligation to repay them, often with interest, which can accumulate over time. Therefore, it's crucial to borrow responsibly and have a solid plan for repayment. This means understanding the terms of your loan, including the interest rate, repayment schedule, and any fees associated with it. It's also wise to only borrow what you absolutely need rather than the maximum amount available. This can help minimize your debt burden after graduation. By understanding the different types of loans, repayment options, and potential avenues for loan forgiveness or refinancing, you can make informed decisions about your financial future. Federal loans, for example, often offer more flexible repayment options and lower interest rates compared to private loans. Additionally, some federal loans may be eligible for forgiveness programs if you work in certain public service jobs. It's also important to explore all available resources. Many schools offer financial literacy programs that can help you understand how to manage your money, budget effectively, and plan for the future. Online resources and tools can also provide valuable information and guidance. Start planning early, explore all available resources, and don't hesitate to seek guidance from financial aid advisors or reputable financial literacy organizations. These professionals can provide personalized advice based on your individual circumstances and help you navigate the complexities of student loans. Remember, knowledge is power when it comes to managing your student loans and paving the way for a brighter, debt-free future. The more you know about your loans and your repayment options, the better equipped you'll be to make smart financial decisions. This can help you avoid common pitfalls and set you on the path to financial freedom. Ultimately, the goal is to graduate with a manageable level of debt and a clear plan for repayment. By taking proactive steps now, you can reduce your financial stress and focus on building a successful career. With careful planning and responsible borrowing, you can achieve financial freedom and enjoy the benefits of your education without being weighed down by debt.